GPs and LPs partnering up to buy multifamily properties in something called a syndication. It's a lot of words. What is a GP, a general partner? Let's talk about it. Between the two, a general partner does all the work on a multifamily property. An LP gets to be passive investors and passive owners. General partners work for their equity. Limited partners, or LPs, pay and invest money for their equity. The general partner is an active manager in the property and the day-to-day business. They're responsible for making important key decisions on a day-to-day basis. They're in charge of hiring the property managers on site. They're really in charge of driving the success of an investment. A GP's role begins when they start sourcing deals and underwriting deals and talking to brokers and finding the properties to buy in the first place. If there's no property to buy, there's nothing to invest in as a limited partner. GPs must know what their LPs, their investors, are looking for and then go out and find it. And then once they find the deal, they go out and raise capital from passive investors. It's their job to secure all the capital needed to put the down payment. If you want to raise the money up front to do all the renovations, that also comes from investors. It's a lot of work. Now, once we buy these properties, the general partner's job is to asset manage or manage the asset. Their job is to oversee the property manager. Their job is to make sure that the business plan is getting put in place in proper ways and to make sure we're hitting all of the key indicators that we're looking for throughout the holding period of these properties. And that brings up decisions. All the decisions made in these investments are done by the GPs, the general partners. The passive investors, they don't want to make all these decisions. They're not experts in this field. The GPs are. They've gone through it, bought and sold multiple properties, seen successes and failures in different businesses, and they're putting all that education and all that experience to work on this investment. For doing all that work, GPs also get a share of the profits. It's called sweat equity. Now, GPs do have a higher level of liability and risk involved in these properties. Sometimes they have personal guarantees on some of the loans. There may be some liability involved for the general partners if anything goes wrong on the property or financially, but all that is spelled out in something called a PPM, or a syndication agreement between the GPs and the LPs. It's a really detailed document. It's long, and both the GPs and the LPs will sign this, agreeing to what the terms are. So overall, the GPs, the general partners, are really the active investors in the syndication. Without the GPs, the LPs have nothing to invest in. Without the LPs, the GPs don't have enough money to go out and buy a property. So it's a beautiful partnership that's a win-win for both parties. My name is Chris Collins. I've invested as both an LP and I've been a GP on multiple properties. We've bought properties, sold properties, ran the business plan, raised capital from investors in multiple states across the country. If you ever want to talk about investing, you can reach me at amitycashflow.com. Talk to you more tomorrow about investing in apartments.